We see stocks up for the day, not a whole lot, but they are up for the day. Bonds and gold are down. Again, not a lot of movement in the market today, but let's talk about what's going on. Jump, as we always do, first into the S&P 500 as depicted by SPY, and jump on to the weekly chart going into our third week of up movement. Price movement has pushed through the weekly trend line. Of course, it looks like right now the market bottomed out. We can see where it bottomed out last. At least that was on the 28th, the week ending the 28th of December, right at the end of the year. Then started that next week off with a green spinning top, means indecision tending up. We saw the derivative oscillator losing downward momentum. For this week, it has switched over into the green. Now again, until the end of the week, we can't call the candle or the indicators finished, but it sure appears that it's going to end up with a green derivative oscillator. 3 up candles, this latest candle just forming, 3 days into a 5-day candle, but it appears to have clearly pushed through the weekly trend line. And of course, we see the price percent oscillator getting very near the flattening red signal line for a potential weekly vertical crossover. Now, it's getting long in the tooth so far in the week, only 2 days left. If it's some booming up moves, then of course we might finish the week with a weekly vertical crossover. You guys know what that means. If you signed up for our texting service, we'll alert you to whether or not that occurs. Well, we'll alert you if it does occur. If you're not already signed up for our texting service, look in the show notes. You have to live in the United States. I'm sorry, those who live overseas, but don't worry. Listen to the comprehensive review and forecast that we publish every Friday after the markets close, and we'll tell you if there's a weekly vertical crossover. But if you live in the States and you'd like to receive the text, it's for free. If you've signed up for it in the past, you don't have to sign up again. We haven't had a weekly vertical crossover in quite a while. Somebody asked me, hey, I'm not receiving your text messages. Well, first off, we promise not to bombard you with text messages and to let you know when there was a weekly vertical crossover. Hasn't been one in a while, so maybe that'll happen by the end of the week. So again, appears to be going into the third week of decent up movement. What do we see on the 2-day chart? Well, this latest 2-day chart just finished drawing, representing Tuesday and Wednesday. Remember, this is a shortened week because we were off for Martin Luther King Day on that first day. So we see a red open box spinning top. Again, indecision tending down, not super strong down because it's an open box red candle. Strong red candles are the solid red. Strong up candles, the open box green. And again, we use Heiken Ashi candlesticks. Derivative oscillator losing some upward momentum. Price percent oscillator not heading up at the same strong angle it had been, so falling off some, but still in a confirmed up move. So we go from the 2-day to the 4-hour. And of course, we saw down movement in the morning and further down movement, and we're talking about as far as the price percent oscillator, a crossover going down, and the derivative oscillator gaining downward momentum both in the morning and in the afternoon. Now, please note, the S&P 500 was up for the day 0.19%, but we're talking momentum and oscillators and Heiken Ashi candlesticks. So again, that momentum being lost on the 4-hour chart, even though it was an up move for the day. We're not looking at just price movement. We're looking at oscillations. And, well, I said we're not looking at just prices. We're looking at price movement and oscillations. So some weakness inherent there. Doesn't mean anything at this point until we have a weekly vertical crossover or that 2-day chart changes in the direction of the weekly chart. We don't have a trade. We're just waiting for things to shake out. Markets are just in flux right now when it comes to stocks. Let's go from the S&P 500 to QQQ, which is, of course, the NASDAQ 100. What do we see going on there? Derivative oscillator gaining upward momentum. Price percent oscillator trying to get closer and closer to crossing over going up. Will that happen by the end of the week? It could. But again, not a super strong candle forming. The candle the prior week was strong with a big wick on the top, but little wick on this candle, not moving, is as high even as the prior week. Now, 2 more days left, so that could change. We'll just wait, watch, and see. And again, still in a confirmed down move until the week closes out. And if there's a weekly vertical crossover, we'll let you know. What do we see on the latest 2-day chart? More indecision tending down now. This is a solid red spinning top, and that's a more solid indicator than the open box one we saw on the S&P 500. Derivative oscillator losing momentum. Price percent oscillator not heading up at the same stronger angle it had been. We go to the 4-hour chart, and of course it crossed over going down in the afternoon on the prior day, on Tuesday. Down in the morning, down in the afternoon, even though again the Qs price-wise was up 0.13%. Derivative oscillator gaining downward momentum, price percent oscillator heading down. So we'll keep our eyes and ears open, see what we see using all the charts all the time. We're going from stocks to bonds. Bonds were down for the day, just barely 0.04%. What do we see happening there? Well, after 2 down weeks in bonds on the weekly chart, penetration of the weekly trend line all the way back on the 11th of January, we have what appears to be forming an up week, although we've got a week with a down wick on a solid green candle. And again, solid green candles aren't super strong. The open box candles are the strong ones when it comes to up movement. But we see the derivative oscillator that had been flat going up a little bit. Price percent oscillator continuing to lose upward momentum. So keep our eyes on that. Remember, weekly chart still in a confirmed up move. Now we go to the 2-day chart. It's in a confirmed down move as per the crossing over going down back on January the 15th. We see, however, this latest candle, green open box spinning top, which again showing perhaps a bottom for a short time, maybe longer. But again, still in a confirmed down move. Is going to have to cross over going up before we'll have any potential trade in 20-year bonds on an up move, since the weekly's in a confirmed up move. We see that the derivative oscillator, however, is continuing to gain downward momentum. Price percent oscillator still heading down, hasn't even gone flat yet. So we'll watch, wait, and see as the new candle, the new 2-day candle starts forming tomorrow. We go to the 4-hour chart, and of course the 4-hour chart crossed over going up at the end of the day and continued on up in the afternoon, again getting right around where it ended up over the prior day in the afternoon. So again, we have a market in flux. Things are just shaking out. 2-day chart heading down on bonds, weekly chart heading up, now the 4-hour chart heading up. So until things sort out, we have our weekly and our 2-day charts moving in the same directions. We can't look for a trade at that point. Doesn't look like there's going to be a weekly crossing over on TLT before the end of the week. It's got a long, long way to go, and actually as far as that weekly chart goes, looks like it's heading up again. So nothing there for us to do except watch, wait, and be patient. We go now lastly to bonds. From bonds to gold. Gold down for the day 0.14%. Now gold had been heading up for many, 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 many weeks, and then all of a sudden started weakening over the prior week. And so far for the course of this week, a solid red spinning top means indecision tending down. Derivative oscillator has been losing upward momentum going into 3 weeks now. Price percent oscillator, however, is still heading up. Gold still in a confirmed up move. So we go from gold on the weekly to gold on the 2-day. And we look at the 2-day chart on gold. What do we see? Well, we see that gold now is in a confirmed down move on the 2-day chart, taking away the possibility of an up trade in gold until that 2-day chart turns back over, moving up. So we will reverse our arrow to down. So now we have again this divergence between gold on the weekly and the 2-day. Derivative oscillator gaining downward momentum, price percent oscillator heading down. Lastly, we go to the 4-hour chart, and gold just continues to meander down. Derivative oscillators lost some downward momentum, but that price percent oscillator is still heading down. Gold just sort of looks like it might have hit a short-term bottom and is just sliding sideways at this point. So we'll continue to watch and see when these markets start offering us some trades again. Our best possibility might be in weekly vertical crossovers going up on that weekly chart for the S&P 500 and for the Qs. That might happen by the end of the week. It might not. If it does, we'll let you know. If you want to help us out and become a Patreon supporter, please look in our show notes. We would love to have your support there. Lots of great gifts and things for you. Depending on the level you choose, you can even get a free book. You can even get, with some continued support, you can even get a year's supply of our trader journals. Don't forget, the trade worksheets, the daily market worksheets, and the weekly market worksheets and make up the trader's journals are all for free as PDFs under the show notes. Plus, we have great training at the website on how to fill out and use the trader, the weekly, and the daily journals, your daily market reviews. So, thank you so much, my friends, for all of your support and help. If you want to buy the book, there's also, that's Charting Your Way to Wealth, and it's 8th printing. We've been sending out books daily, so if you don't have your autographed copy, you can, of course, find the link in the show notes and order one, and we so appreciate your support. This is the way we monetize the channel and pay for all of the costs that go into a channel like this that provides daily information to you. You have questions, problems, concerns, let us hear from you. cw@chartingwealth.com. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.